Welcome to Share Talk, the only podcast where investors come first.
Today I'm speaking with Andrew Bell, who is the chairman of Red Rock Resources. How are you there?
Pretty well, thank you.
It's been a short while since we've spoken about things. Obviously, the last thing we touched on was the impending sale in relation to the Tshipi Mine. So, could you give us an update that you obviously covered in your RNS of the 5th of June?
Yes, I think the process of sale is continuing. The update was actually more about the fact that there's going to be an interim distribution in September, but we did refer in passing to the process of sale or listing that's taking place. So yeah, very briefly on the distribution, we had, as you know, about a 520,000 distribution in March, April, and now we're going to get a 250,000. I'm talking pounds here, distribution in September. So for this year, you'll have near £800,000 distribution, which you can think of as a dividend, because although we're structuring it slightly differently, that's the effect.
So in regards to the ongoing sales process, is there any sort of information coming back from that?
Well, it's the nature of a process like that it remains on a need-to-know basis and fairly secret, because the people you're negotiating with, particularly if they're some of the world's largest, most prominent companies, don't want you going out giving moment-by-moment, blow-by-blow updates, and wouldn't in fact negotiate on that basis. So I'm not able to say anything more than what has been announced. And what has been announced, I think, has been very clear from the beginning of the year, is that we have a Merrill Lynch-led process which will lead to either a sale of the business of Tshipi or a listing of Tshipi on the Johannesburg Stock Exchange. Now, the sale process has been taking place in parallel with the preparation for listing, in other words, writing everything that's necessary for that. And the sale process has been conducted in a very orderly way, with a couple of rounds of bidding and a data room, and those who are going through the second round having detailed discussions with the company. And the culmination of that process is fairly imminent.
So once obviously the evaluation event takes place, what sort of direction will the company take, and will sort of Red Rock look to distribute some of those funds?
Yes, I mean, we have obviously a couple of possible outcomes. One would be a straight sale, and the other would be an IPO of Tshipi. In the event of a straight sale, cash would be flowing immediately. In the case of an IPO, it might be that some stock would be sold at the time of the IPO, or it might be that one would be selling after. So the consequence of the first alternative, one of the offers being accepted, would be that we get a lot of cash in one lump very quickly. We anticipate, although everything needs to be structured so that it doesn't get held up in duplicate and comes to the ultimate shareholders. The other alternative would be one that would get value into our hands straight away, but the money into our hands would depend on the realization of Tshipi shares. However, if you look at holding in Tshipi, if it were listed in its entirety at a sort of so plus or minus company, then we'd have 0.6% of that, so it wouldn't be difficult to trade out of. But there would be a timing implication of going one way or the other.
what sort of perceived timescales are you envisaging for both of these scenarios?
Well, I think it's common ground that the sale process is coming to a head now, really, because when you go into a process like that and you have a lot of people being lined up and then crossing the jumps at the same time, there comes a point at which people cross the finish line, and that's the end of the process. And so there's a very fixed timetable for that, and we're reaching the stage at which the company will either, or Tshipi will either make a decision to accept one of the offers or make the decision that it can do better by having an IPO. That is really very close. That forking of the ways, the choice of which way to go.
If we can talk about one of your other assets then, which is Limon, and obviously today's news release referenced the payments. Would you like to sort of discuss and summarise that for us?
Yes, we still have 750,000. We've been paid out $250,000 of the promissory note that we are holding. We'll get paid out the rest in 10 months' time. That's $750,000. We've also received $50,000 interest on that, and we received a small royalty payment. The previous payments have been a bit bigger, and this reflects a little bit of downtime at the plant at El Limon, but the company, Columbia Milling and Para, now claim that they have that working properly and smoothly, and that there will be quite rapid ramp up now in production as the second ball mill has been brought into production. Everything is, after a process of about 18 months, it should have been much faster, and we expected to be much faster. That process is now finished. The new equipment has been brought into operation, debugged, and is going to run smoothly. So we expect that in succeeding quarters we will get much more substantial royalty payments. And of course we do expect that we'll be getting millions of dollars of royalty payments over the next 3 or 4 years.
That sounds promising. Let's hope that things continue in an encourageable way. Could we have an update regarding the current situation with Maguri and Shoats Creek, please?
Shoats Creek, I'm certainly happy to say a brief word about. We have had partners there in Mayan, which was for a time running Shoats Creek Development, which is the operator. Though they're not anymore. We've had partners there who have been less than satisfactory in terms of their competence or their financial reporting, or indeed in any other respect. And I don't think that'll come as a surprise to anybody who's been following the Mayan share price and Mayan performance generally. We are talking to people to find our way out of that one. But suddenly, as you have noticed, we haven't made any new commitments there for over a year. And we're now fishing in those waters to see what we can get out. But the expectations we had when we went in haven't been fulfilled, and that has been in part due to management, which has been so poor that we actually can't tell whether there's a good asset underneath it or not yet. But we're still working on that. As for Gori, I don't think I'd wish to add anything to previous announcements. We continue to pursue our interests in Kenya in relation to that gold asset, and we'll make announcements in due course.
Could you update us in reference to Elephant Oil, please?
Elephant Oil has an interest It has an onshore license in West Africa, just near the Nigerian border, and in Togo, and that looks extremely promising. Of course, the conditions in the oil market the last year or two weren't such that people were putting a lot of money into that sort of thing. So even though it's onshore, which would make production cheaper, exploration still costs a certain amount of money there on a new project, and seismic costs a certain amount of money. I think development oil has been, is my understanding, and we are only minority shareholders, my understanding is that we have been doing better and spending more than the other onshore rights holder, and as a result are relatively in good standing with the government. In other words, some continuing social work and expenditure has continued, but the major exploration, they have allowed that to be extended. So nothing has been spent there, the position has been retained, and as we progress, there will be, in due course, I'm sure, an opportunity to make something out of that asset, whether that will be by exploration directly or whether it will be as part of a listing or sale of that asset by ourselves and the other partners in it.
Would you like to give us a brief summarisation and a sort of closing statement, please, Andrew?
Yes, obviously we have been holding on to our purses and been fairly tight about what we've been prepared to do over the last few months, and we have got various revenue sources that have been coming in, and we've managed to lay off a lot of our office administration cost. And this was because we can see the value crystallization event from Jupiter as being very significant and not a bit reflected in the share price, and therefore it will be harmful to shareholders if we were to do anything more active that would have as its inevitable result the necessity to raise more money and therefore issue shares, which would be at a huge discount to what we perceive as underlying value. Because the Jupiter asset is run by a management team, which is some of the finest mining people in the world, and its record as an operating asset shows that it's one of the best run mines anywhere. It's, in a way, we're holding an asset higher quality than ourselves. And when we see a very near value crystallization or liquidity event in that, it would have been foolish to prejudice any of the value or to spend it in advance on things that might not be beneficial. So there's been a relative shortage of news from us on other fronts. However, there's been a consistent pattern of improvement in Colombia. Things are being slowly brought into the kind of condition that we expected them to be. The reason we sold that asset is because we thought these other people would run it much better than we could. And I think so far they run it okay, but from here on, that'll really be put to the test. If it works, this will be another extremely good source of revenue and value for us. Thirdly, we have Kenya, which is the wild card, coming up for an election in the autumn. So once again, we're in one of these periods where it can be a little bit dangerous to have too high a profile, because then with the new constitution, the number of elected positions has increased so much that there are more people wanting to spend more money on the election, and they look around to see anyone they might get it from. So we're sticking to our legal rights and playing this a bit long, but we really have to try and make progress in the periods between elections, not while they're happening. And of course, we have one or two other interests. But I think that the thing to watch with us is going to be what we start doing as the next steps. In other words, the the coming to a head of the Jupiter situation does present us with some opportunities. And although we can't make major steps with that yet, we can start to strategize and look for strategic positioning in assets that are like Jupiter going to provide revenue. It may be also, depending on the incidence of funds to us and the amount of funds to us, that we will be in a position to make distributions ourselves. And certainly we know that that could be popular with shareholders. We're in a very interesting period. We have probably 2 or 3 or 4 months of really interesting, good news flow coming up. And so I'm looking forward to being able to tell you much more as that comes through.
Andrew, it's been a pleasure speaking to you as always, and we'll look forward to the news flow as and when it happens.
Thank you.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.